All right, now joining us for more on Yelp's impending IPO is Francis Gaskins from IPO Desktop in Culver City, California, and Anupam Palit from GreenCrest Capital in New York. Anupam, let's start with you. You've been looking through the numbers. What's your initial take on the first blush?
Well, the first blush, I think there's two big things, one positive and one big to the negative side. On the negative side, it looks like the total revenue number is a little bit lower than people had been expecting. We had been estimating 2011 full year revenues a bit over 100 million, and it looks like the full year number looks like it's going to come closer to 85 or 90 million for the full year. The second thing is on the positive side, and I think Corey mentioned this a couple of minutes ago, is this march toward profitability. If you look at 2008, the operating loss, the margin on a negative basis is 50%. It improved quite a bit in 2009 to 9%. They invested in the business quite a bit in 2010, again negative 20%, but again in 2011, you're seeing it closer and closer inching toward profitability. So revenues a little bit lighter than we'd anticipated, but the company is getting closer to profitability.
Francis, how about you? This is a company that's not profitable yet, a company that consumers love, but is it going to be able to woo investors as well?
Well, yes, I think sure it will. What's interesting is to look at the valuation metrics for Angie's List and Groupon, and both are selling, believe it or not, at about 9 times annualized revenue, and they're selling at about 33 times book value. So if you apply that, the price of sales to Yelp, what we get is at $1 billion market cap, it's got 11 times sales, but it's not losing as much money as Angie's List. Excuse me, and Groupon is kind of unclear. So I think on a price to sales basis, it'll be okay. I just don't think you can get the $2 billion valuation that they've been talking about.
Now, there is competition out there. What about the competition for local advertising? This is a business that Yelp is chasing, but Google is also chasing it. Groupon is chasing it. Anupam, how does Yelp compete with that?
Well, really...
Oh, I'm sorry.
Sorry about that. Yelp does things a little bit differently than a lot of businesses, which is they've built a real social platform, and from their very beginning, they have really built this social network. And a lot of academic studies have shown that when there's a social incentive that's built around the platform with these reviews, reviewers tend to be more prolific and they tend to be less extreme. That really helps Yelp have this, I guess, this reputation being an honest place, and where you can get a lot of reviews. That drives eyeballs, and that will really translate well to advertising partners.
Now, Francis, the timing is certainly interesting here. You have Angie's List going public today after a 16-year journey, Yelp filing today as well. The window seems to be wide open. Do you think Zynga could be coming out soon?
Well, they're trying to come out by the end of December. I think Zynga's problem is that their quarterly sequential metrics are declining. They have to come out with new games, and I don't think they've been that successful. One thing about Yelp is it's in 47 markets here in the U.S. They're in some international markets, but they don't have presence there in terms of people. They plan to spend $15 million next year expanding in the international market. That'll be interesting to see what happens, because I think they do have a successful model here that can be expanded overseas.
Anupam, is there a sense of urgency that you think these companies are feeling, that if they're going to go out, they should do it now despite the market volatility and what's going on over in Europe?
Well, it's a really great question. I think earlier this year we had a very, very strong market. I think a lot of companies, really rushed out offerings and IPOs in that market. We had a bit of a slowdown, and exactly what you said a couple of minutes ago, with Angie's List having what I would consider a successful IPO, I think that you are going to see a lot of companies rushing to get out right now.
Francis, you made a comment earlier about how Yelp versus Angie's List have taken advantage of the mobile movement. Explain to us the comparison between these two companies and how they're utilizing smartphones.
Okay, Yelp has about 5 million mobile users. I don't think Angie's List has made the transition to smartphones. So my understanding is that with Yelp you can take a smartphone and check the ratings of restaurants around you in that geographical area. I think that Yelp is more nimble than Angie's List. I think Angie's List had a good plan, and they've really stuck to it on a linear basis. I think that they probably picked off the best markets, that they've taken the low-hanging fruit. I think it's going to be harder in the future to expand their subscriber base and more expensive.
Francis Gaskins of IPO Desktop and Anupam Palit of GreenCrest Capital, thanks for joining us here on Bloomberg West.